Welcome to another Wall Street Informer production on WSI TV.
Hello and welcome back for another episode of WSI TV. I'm Sean Bauer, with me is Jordan Bishop, and today we have some really important information we're going to get to. Now we're seeing some really strong warning signs that 20% of your money, maybe more, maybe a little less, could be vanishing very soon. We'll have the why and the when for you here very, very soon. But first, we need to take care of some housekeeping. We have some versus results, Jordan.
Yeah, definitely. The end of this round worked in Sean's favor. I mean, we both had decent gains on this, you know, as usual. But Sean came out with his GBX 5.2%. I got 4% on my tile. So it was a decent round, but unfortunately, I'm going to have to take the punishment.
Yeah, that's right. And we once again, we don't have the wheel for you, so we're going to just pull a punishment out of the cup, and I'll let Jordan do it so he knows I'm not cheating here.
All right, you want to shake it up for me?
Yeah, let's do it.
All right.
Yeah, just, I mean, in 2 weeks, 4% gain, a 5% gain. I mean, just really solid results there if you played along. Well done. And let's see what Jordan has here for punishment.
We got hot sauce shot.
Hot sauce shot, all right. So one we've done before, one I had to do, and now I can't use that hot sauce anymore, by the way.
Yeah.
It scarred me. So that'll be, Jordan will be doing the hot sauce shot next time.
Right.
We'll get to some more versus picks. We have another special round for you at the end of this episode. But we can start here by getting into that big warning sign that we're seeing, Jordan.
Yeah, we're going to throw some interesting facts at you. Don't worry, Sean's made it nice and simple by creating these pie charts. But this will shock you. You know, we've had some inside information on this. Yeah. You could be losing up to 20% of your money very soon, but we're going to protect you from that. Yeah. But just to run you through the numbers, you know, so we're looking at the amount of time that a certain, we've got 3 different corrections. So we're looking at the amount of time between specific corrections have happened, right? And,
yeah, that's right.
The first one, 5% correction.
Right, and this is all based on the S&P 500. So we're looking at the overall market and how closely tied the market is to individual stocks. This is going to weigh very, very heavily on those as well. So whether you're trading the market or individually, big impacts here. And just to mention, this is from Ned Davis Research, where we're getting all these facts from. Yeah, so the numbers are really staggering whenever we first saw them. Some big warning signs here. So on average, there are roughly 10 weeks between periods where you see a 5% correction in the market. So 5% dip. Right now, we're at 53 weeks without seeing a 5% dip. So just, I mean, that's massive over the average here and something we should be expecting any time now. But it does get worse, Jordan.
Yeah, it does. Looking at a 10% correction, that's a 10% dip in the market. The average is 33 weeks between 10% corrections, and right now we are sitting at 72 weeks. So over double the amount of time overdue with that.
Yeah, that's a big number for the overall market as well, and that's something that's gonna, shock your portfolio if you don't see it coming and if you're still all in on all this stuff. But even more than that, a 20% correction, something that could trigger a bear market. The average number of weeks in between is 127. Right now, we're at 421 weeks, which is just mad, Jordan. It's massive.
As you can see, this market right now is long overdue a correction, whether it's 5, 10, or even 20%, which, like you said, Sean, could trigger a bear market, you know, which we've been long, like I said, we've been long awaiting for quite a while right now.
Yeah, that's right. And whenever that happens, of course, your fund manager isn't going to tell you, well, get your money on the sideline or do anything else. He's going to tell you, you're in it for the long term. Hold and wait for things to turn around. Yeah. Meanwhile, you're missing out on 20% of your money.
Yeah, I mean, he's making money, your fund manager's making money as long as your money is in there. But the difference here is we're going to keep a close eye on this, obviously, as we do every day. And we're going to get you out before your fund manager even blinks an eye, you know, at this market correction that is, fair to say, is imminent, right? Yeah. We just don't know how soon yet, but, you know, we'll show you we'll tell you when this trigger has signaled, and you know, you might even be able to spin a profit off it, right?
Yeah, absolutely. I mean, whenever you take money out of stocks, I mean, you can be in cash, that's fine. You'll just miss out on these big losses, which is great, but you can also move into things like gold, currencies, commodities, of course, ways to make your money while you're not making money on regular stocks.
Exactly, and we know when the stock market goes down, everything else goes up fairly quickly, so it'll be a strong reaction, you know?
Yeah, so just be on the lookout for that. Of course, be tuning in because we'll keep you up to date with this. And while we move on from that, we have a new versus round, another earnings round. If you were with us before when we did this, companies report their earnings every quarter, and the stock price can jump or dip significantly based on those results. What Jordan and I are going to do is pick one company each. They report their earnings this week sometime. And the company that has the highest jump in stock price after they report their earnings the next day, that's going to be the winner for this this versus round.
Yeah, so we are looking at overnight gains here.
Right.
You know, I mean, usually we would be trading options, but we're just going to look at how much the stock jumps the day after it reports. So if you want to kick us off, Sean.
Yeah, Jordan, I'm going to go with Instructure Inc. The ticker is INST, and it reports its earnings today after the market closes, so we'll know first thing in the morning.
All right, and the stock that I'm going to pick that's going to beat yours is Blackboard Inc., BLKB. That reports today after.
All right, we know that one well, so we'll see how it does. All right, so as we pay attention to earnings this week and we wrap up this episode, any final notes, Jordan?
Yeah, just to take our mind off earnings for a second, I'm talking about Sears and Amazon. Amazon's been a hot topic lately. Jeff Bezos just surpassed Bill Gates to become the richest man in the world.
Yeah, wow.
But Sears is, it's actually been cast a final lifeline. Sears was doing terribly, closing a bunch of stores. Its stock looks horrendous. But recently they announced that they're going to start selling appliances on Amazon, which I think is a massive move for them.
Yeah, big move.
They're going to use Amazon as a stepping stone to get their brand back to hopefully to where it used to be.
Yeah, that's really big news for Sears and for retail in general. So we'll see how that does, and we'll keep you updated as well. Thanks for the note.
Yeah, no problem.
And thank you all for watching. We'll speak to you next time. Cheers.
Thanks for watching another Wall Street Informer production on WSI TV. Be sure to visit wallstreetinformer.com, where you can become a member for free and gain instant access to the secrets of market millionaires via the Wall Street Informer Vault. So go ahead and claim this gift for free now at wallstreetinformer.com.